Hello students, a warm welcome to all of them. I hope you all are doing good and fine. In our today's session, we will be starting with the chapter number 10, Trading Losses for Individuals. Before moving forward to our today's session, first we will look to the term trading losses. What does the term trading loss means? So students, we will take an example of an individual. If an individual is carrying a business, means he is doing a business and his income from the business is more when compared to his expense, he will save or he will generate profit. The net figure will be positive. Income is more, expense is less, so the net figure will be positive. This is the case of profit, a profitable business. Now students, if an individual is carrying out a business and his income from the business is low when compared to his expense, the overall the net figure will be negative. It will be negative. So this will be a case of loss. So when a person is carrying his business and his income is less when compared to his expense, it will be a case of loss. The business is incurring loss. I hope this is clear. Now students, when we started with our chapter number 7, income from self-employment, we learned to calculate the tax adjusted figure. We were starting with the accounting profits and we were doing some adjustments. Some adjustments were done to this accounting profit so that we arrive to our tax adjusted profit, that is tax adjusted figure. These adjustment students were as per the tax rules, because under IS and IFRS some expenses will be allowed, but under the tax rules the expenses which are allowed as per IS and IFRS will not be allowed under the tax rules. So we were doing the adjustment to the accounting profits so that we arrive to a tax adjusted figure. But if the tax adjusted figure is positive students or negative, if it is positive, it is the case of profit. If the tax adjusted figure is in negative, it will be the case of loss. And if it is profit, it will be taxable income under the trading income head. This will be taxable and we need to pay tax on this profit. But student, when we have a loss, when the tax adjusted figure is in negative, we have a loss, then will HMRC pay us? No students, HMRC will not pay us. Here we are generating profit, we are paying tax. If we incur loss, will HMRC pay us? No students, HMRC will not pay us any refund or any amount because we have incurred loss. But HMRC will provide some relief. Now HMRC will provide some relief. Now we will be studying what does this relief means. So the relief which is provided by HMRC is students that the trading loss which we have in a current tax year, that is 23-24, we can set off this loss against other incomes. Means the other income which we have generated, like the property income, employment income, pension income, this loss figure we can reduce from the other income so that our other income will reduce and the tax on the other income will be low. So this trading loss can be set off against the other incomes such that the taxable other income will be low and the income tax on our other taxable income will be low. So overall the income tax liability will be payable will be low. As profit we will pay tax. If we have a loss, HMRC will not refund us any amount. Either reliefs are provided. What is the relief? Relief is that this trading loss, the trading loss, we can set off against the other income such that the amount, the total of the other income will reduce and the tax amount will also be low. This general understanding is clear or not? I hope it will be clear. This is the main point to understand. How will or how does the tax loss, the trading loss arise, and how we will claim the relief. In our today's session, students, we will be covering these 6 topics under this chapter. Understand how trading losses can be carried forward. So these are the types of reliefs. Either we can set off the relief against current year or carry forward it. We can carry forward and set off it against future income. Understand how trading losses can be claimed against total income and chargeable gains and restrictions that can apply. So the relief, the trading loss can be set off against the total income and chargeable gains, but we have some restrictions we'll be covering in more detail. Explain and compute the relief for trading losses in the early years of trade. This means, students, when I am starting my own business and I am setting up a new business, as soon as I start my business, I will not generate profit. I will be having losses because the business will take time to set so that I generate profit. So in the initial years of my business, I will be incurring losses. How will I set off these losses? I have a relief to set off the losses which have incurred in our initial days of the business. Explain and compute terminal loss relief. If I am closing my business or shutting down my business, in that period if I have a loss, how will I claim it? Recognize the factors that will influence the choice of loss relief claims. So students, as we have many types of relief, either we can carry forward the loss, either we can set off against the total income or chargeable gains, or we can claim the opening relief, that is the relief which is available if the loss have been incurred in the initial stage of the business, and if we are closing our business and we have a loss in that year, how we can claim it. So we have many types of relief. We have many types of relief, and how to claim which relief, we will be having some factors which will affect it. So students, we have many types of relief. Now we need to decide which relief we will claim first so that we have more tax advantage. So we will be studying what are the factors which influence the choice of loss relief. Describe the alternative loss relief claims that are available to partners. So what are the loss reliefs which are available to the partners? The loss reliefs which are available to the partners. These 6 topics we will be covering under chapter number 10. So now students, moving to our next slide, we have a trading loss. We will need to determine what is the amount of trading loss. And students, we can have 3 types of losses. Either I am starting a new business, I am setting up my new business and have loss, that is opening year provisions. If I have set my business a long ago and I am carrying my business from past 10 years and after 10 years I incur loss, that is ongoing year loss. The third case is closing years. When I am closing my business, I incur loss. So when I set up my new business, I incur loss, means opening year loss provisions will apply. If I have set up my business 10 years ago and now I am incurring a loss, this will come under the ongoing year loss. And if I am closing my business and when I am closing my business I have a loss, it will be covered under the closing year rules. Sole traders may not always be profitable. In financial accounting and financial reporting, you learn how to account for losses. In this chapter, we explore the tax reliefs that are available to individuals for the trading losses they incur. So students, we have already covered the losses under the IS and IFRS, under the financial accounting, how we will deal with it. But when coming to the tax rules, we have tax reliefs available for claiming the trading loss. So we have tax reliefs for the trading losses. Now moving to the introduction of this chapter and important points. So students, as we have seen, a trading loss arises when the normal tax adjusted trading profit computation gives a negative result. That is, when we calculate our tax adjusted trading profit computation figure, if we get a positive figure, it will be income. If we get a negative number, it will be loss. This is clear. Now, a trading loss can occur in two situations as follows. Tax adjusted trading profit before capital allowance. So, before adjusting the capital allowance, we will either have profit or either loss. The amount will be either positive or negative. After adjusting the capital allowance will be a negative number. It will be an expense. So, if the tax adjusted trading profit or loss figure before capital allowance is positive, after adjusting the capital allowance, we will arise to a negative figure leading to trading loss. Either if before claiming the capital allowance the amount is negative, and after claiming the capital allowance also will have a negative number. So this will increase our loss. If we have a loss figure before claiming the capital allowance, if we claim our capital allowance, it will increase our loss. This we have already covered in our chapter number 7. Note that capital allowances are taken into account in calculating the amount of trading loss available for relief. That is, capital allowance is taken into account when we calculate the trading loss which is available for relief. Can increase a tax adjusted trading loss. This is that can increase a tax adjusted trading loss. Can turn a tax adjusted profit into a loss. Here before adjustment of capital allowance we had profits, but after adjusting we had a loss, and before adjusting capital allowance we already had loss. After adjusting the capital loss we have further more loss. So students, each individual or each business person will claim capital allowance so that the trading loss will increase and we can claim relief, which will be benefit for the business. So now students, where a trading loss occurs, the trading loss is allocated to the relevant tax year. That is, the trading loss which is occurred, it is allocated to the relevant tax year. That is the tax year of 23-24. If we are doing business, it will be allocated to the tax year 23-24. If the overall position of the tax year is a trading loss, the individual's taxable trading income for the tax year will be 0, because for the whole year we are incurring loss only. For the whole tax year we have loss, so the taxable trading profits or the trading income will be nil. A number of loss relief options are available to obtain relief for the loss. So if for the whole tax year we have loss, we have the reliefs such that we can set off this loss against other incomes. Note that in the tax exam where relevant, the accounting period will always have the same year end date as the tax year. That is, the accounting period and tax year will align. Now these are the loss relief options which are available. So these are the types of loss relief, students, which are available. Carry forward against future trading profits. We can carry forward the loss against future trading profit. Relief against total income. Opening year loss relief against total income. Terminal loss relief against previous trading profits. So these are the 4 types of loss relief which are available for an individual. Carry forward means set off against future income. Relief against total income means current year if you have any other income, set it against it. Opening year loss relief means if I am setting up my business and initial days of my business are I am incurring loss. So opening year loss relief is available. Terminal loss relief against previous trading profits. If I am incurring a loss when I am closing my business, how can we claim the relief? We have a special relief known as terminal loss relief. For the cessation of the business, and when we are starting a business, opening year loss relief is available. Along with this, these reliefs are also available. So now students, as we have already seen here, that we can have three types of loss. Either we are starting a business, we have a loss. Then we need to see what all are the reliefs which are available when I am starting my business. Second one is ongoing years. I have set my business 10 years ago and now I am incurring loss. What are the reliefs which are available for me? Closing years, when I am closing my business, what are the reliefs which are available? So these are the types of reliefs which are available, options of relief which are available for an individual. Now we need to see which of these relief will apply to the opening year, ongoing year and closing year. We will be covering in more detail, no issue students. This is only a general introduction and understanding of this chapter, how it will be covered and how what all the topics it will be covering. Now coming to the first case, that is students, ongoing years. Ongoing years. So students, ongoing years means I have set my business 10 years ago. 10 years ago I have started my business. From 10 years I have been generating profits, no loss. But coming to this year 23-24, I incur a trading loss. Of 10,000 pounds. So now students, as we have seen, as this is the case of ongoing years, now we need to see what are the reliefs, the option of relief which are available to the individual for the ongoing year loss. So students, if an individual makes a trading loss in the ongoing years of a business, the trader initially has to decide whether to claim relief against total income or carry forward all of the loss. So if I have a loss in ongoing years, either I can claim a relief against total income or carry forward all the losses. Either I can claim a relief against my total income or I can carry forward. So here we have two types of relief, that is carry forward relief and relief against total income. So students, for the ongoing year, we have two types of relief. The first relief is carry forward against future trading profits and relief against total income. So if loss is incurred in ongoing years, the individual can claim to set off the loss against total income of the current year or carry forward all the losses. Now students, loss relief in ongoing year. We had two options: carry forward trading loss or relief against total income. So an individual has the option to relieve it against the total income. The loss can be set off against the total income if the option is selected. If not, it will be automatically carried forwarded to the next future years. So students, if an individual who has incurred a trading loss has been incurred, the individual has the option to carry forward or set it against the total income. If the individual will not select this option to set off against the total income, then automatically the carry forward relief will apply. That means if I am an individual and I am incurring loss in my business, if I have two options provided by HMRC, relief against total income, carry forward trading loss. If I will not claim this relief, that is relief against total income, it will be automatically carry forward. So automatically the carry forward trading loss relief will apply. If I, individual, claim the relief against total income and my loss amount is more, but I have set off against the total income, more loss is there, the remaining loss can be carry forwarded. One more option is that students, If I opt the option to set off the loss against the total income, I set it off against the total income. Now if I have more loss, then I can set off against the chargeable gains, because I can set off against the chargeable gains because the relief mentioned here is total income. In total income, the capital gains also will come. Capital gain means when we sell a asset and we have a profit on selling the asset, will be covering under CGT part. So students, if an individual opts for the option to set off against the total income, if the loss is more, then further option is available of setting it off against the chargeable gains. But first, the individual needs to set off against the total income. Then further loss is that either he can carry forward or he can choose the option to set off against the chargeable gains. If he carry forwards, then the carry forward loss relief will apply. If he chooses the option to set off against the chargeable gains, then he can set off to the chargeable gain amount, and if further more loss is remaining, then he can carry forward it. I hope this flow chart is clear. Now we will be taking an example, students. The same example, the trading loss of 10,000. So this is ongoing loss. We can claim two types of relief: against total income, and this is an option, students. This is an option 1 or option 2. If I claim option 1, no issue. If I will not claim option number 1, automatically the option number 2 will apply, that is carry forward loss relief. Carry forward loss relief. Carry forward loss relief. If an individual will not opt for option number 1, automatically the option number 2 will be applied. But if an individual opts for the option number 1, means he set off against the total income. So students, we will take an example. Our total income is 5,000. So our loss is 10,000 and we can set off 5,000. So after setting off against the total income, we have a further option. Either we can set off against the chargeable gains or we can carry forward it to the next year. These are the two options available. So chargeable gain, let's take an example of chargeable gain is 2,000. So further 2,000 we can set off it out. So 10,000 I incurred a loss, I set off against the total income of 5,000, and further option is either I can carry forward or set off against the chargeable gains. So I set off against the chargeable gains. So the remaining loss is, students, still 3,000. This 3,000 can be carried forward to the next year. So this is the way of claiming the relief. The loss can be set off against to these relief. But the detailed rules of the relief will be studying. What is the amount, limitation, when to claim, all those. So if I have a trading loss, first option, I can set off against the total income, or I can, if I will not elect the option number 1, automatically the option number 2 will be applicable, carry forward. So it will be known as automatic relief. Automatic relief. If I opt the option number 1, I will set off against the total income. After setting off against the total income, more loss is there. I have incurred more loss when compared to my total income. This we can set off against the chargeable gains or we can carry forward it. If we set off against the chargeable gains, then if further loss is there, we can carry forward it. So after this, students, please note your point. Please do note this point. After the option number 1 against the total income, we have two options again here. Either chargeable gains or carry forward. Then setting off against the chargeable gains, if furthermore loss is there, carry forward it. But students, one thing, we can't directly set off against the chargeable gains. We can't directly set off against the chargeable. You need to set off against the total income, then we need to set off against the chargeable gains, and then further loss carry forward. Either total income, carry forward it. Either total income, chargeable gains, or carry forward. I hope this is clear. This point is clear, students. The flow chart is very important. Please do understand it, students. It is very important. Now we will be seeing the rules for the carry forward and total income and the chargeable gains. What is the maximum amount we can claim? This is the option of the relief. These are the options which are available to an individual to claim the ongoing year loss. Either he can carry forward or he can set off against total income. After setting off against total income, either he can carry forward, either he will set off against total income, then chargeable again, then carry forward. Where a claim against total income is made, any remaining loss is automatically carry forward. So if we will not claim, if an individual will not claim the option number 1, it will be automatically carry forward unless the individual then makes a claim to set the loss against the chargeable gains. So this means, students, that is, if where a claim against total income is made, that is this. First we have made this option 1. We have made a claim where a claim against total income is made, any remaining loss is automatically carry forwarded. First we will select the option number 1. If we have claimed this, then automatically it will be carry forward unless the individual select this option. If the individual selects to set off against the chargeable gain, then it will set off against the chargeable gain, then remaining loss will be carry forward. This statement explains the whole flow chart. Where a chargeable gain, where a claim against total income is made, any remaining loss is automatically carry forward unless the individual then makes a claim to set the loss against chargeable gains. One important point to note is that claim against gain can only be made after a claim against total income. So to make a claim against the chargeable gains, first we need to make a claim against the total income of that year. So if I am opting for the option number 1, that is total income, then to claim the chargeable gains, I first need to set off against the total income, then only chargeable gains will be available. The claim can be made to the chargeable gains. This is an important point to note, students. So we have seen how we can claim the loss. We have two options, option number 1 and option number 2. Option number 2 will automatically apply if option number 1 is not chosen by the individual. Option number 1 says that set off the loss against the total income of that year. If further loss is there, you can carry forward. If the individual makes the claim to set off the loss against the chargeable gains, then set off against the chargeable gains. Then if any further loss is there, we can carry forward it. But to make a claim of chargeable gains, first we need to make a claim against the total income. Now students, we will be covering the rules in detail. Carry forward of trading losses. The losses which have been carried forward, how it will be set off. Principles of the relief. The key rules are as follows. Carry forward trading losses. It is an automatic relief. If option number 1 is not chosen, it will be automatically applied. The carry forward trading loss will apply. Carry forward against first available trading profit of the same trade. So students, the loss of 23-24, we had a loss of 10,000 pounds and we have not selected the option number 1. So automatically the carry forward loss relief will apply. That is, carry forward of trading loss will apply. This relief will apply. So now this relief applies, means this loss will be carried to the next year. And how it will be set up? Against the first available trading profit of the same trade. So the first trading profit which is available, it will be set off against the same trade. So when we are carry forwarding our loss, it will be only set off against the trading income. Only the trading income can carry forward indefinitely. So students, the loss which has been carried from 23 to 24, this needs to set off against the trading income only, not the total income, only from trading profits. Same trade, that is first available same trade, and this carry forward can be done till indefinite period. If in 2023-24 we have a loss, 24-25 we have a loss, 26-25-26 we have a loss, this will be carry forward to indefinite time period. This also, and this also. But must set off maximum amount possible each year. No partial offset is allowed. So no partial claim is allowed. This means, students, let's take an example. Example of carry forward loss, trade loss relief. So when the loss is carry forward, it will be only set off against trading profits, against trading profits. I hope this point is clear. And it is set off against the first available trading profit, and no partial claim is allowed. So students, 23-24, 24-25, 26-27, 27-28, excuse me, 25-26, excuse me. So in 23-24 we had a loss of 10,000 pounds. In 24-25 we had a 5,000 pound loss. 25-26 we had an income of 10,000 pounds. 26-27 we had 5,000 pound gain income, and here 2,000 of income. So students, this year we have not opted the option number 1, that is set off against the total income. So it will be automatically carry forward to the next year. So next, coming to the next year, here also we have a loss. So it will also be carry forward. This also will be carry forward. This 10,000 loss also will be carry forward. This also 15,000 will also be carry forward to the 24-26. Now students, the relief, the loss will be set off against the first available trading profit. When was the trading profit first available? 24-25. Now the whole amount will be reduced. The whole 10,000 will be set off. We can't choose the amount saying that I'll reduce only 5,000 this year. Next year I'll reduce 5,000. Next year I'll reduce 5. No students. This is not applicable. Partial claim is not allowed. The whole amount needs to be set off. The whole amount needs to be set off. So I have set off it. Then the 5,000, this against the first available profit, that is the first available profit is this, but this has already used it. So this will set off against this year. I hope this is clear. So no partial claim is allowed. Partial claim is, students, let's take this example. If example an individual has no other income, he only has the trading income. For all of this tax year, he only has the trading income. So this year, the individual will say, this amount will be covered by my PA, so I will not pay any tax. If I claim this loss relief, I will waste my PA. The personal loss 12,570, 12,570. If no other income, this will be his total income and net income. So he will say, I will not claim the loss relief, I will claim in next year, so that my personal allowance will not be wasted. No students. The carry forward loss relief will be set off against the first available trading profit. So the PA will be wasted. We can't claim partial amount. So if it was 25,000, you can't say that I will only claim, not 25,000, let's take 15,000. You can't say that I will claim only 2,000 because my PA will get wasted. No students, you can't say that. You need to set off the carry forward loss against the first available trading profit, and no partial claim is allowed. No partial claim means I can't choose the amount. I can't choose the amount of loss which I will set off against that tax year. The whole amount needs to be set off. The whole amount needs to be set off. If no specific claim made, if no claim is made, students, carry all loss forward. So if we have not made any claim, we have already seen it will be carry forwarded. If specific claim made against total income or chargeable gain, carry forward remaining unrevealed losses. So students, if no claim is made, carry forward the loss. If specific claim is made against the total income or chargeable gains, then carry forward the remaining unrelieved losses. The carry forward relief claim must be made to establish the amount of loss carry forward. This claim must be made to highlight the amount which will be claimed. For a tax year of 23-24 loss, that is the loss of 23-24, the claim must be made by 5th April 2028, that is 4 years from the end of the tax year in which the loss arose. That means students, the claim of the relief, that is carry forward trade loss relief, must be made within 4 years. This must be made within 4 years. This is only for general understanding purpose, students. This is the time limit, so you need to remember, that is 23-24 plus 4 years, it will be 28. This relief must be claimed within 4 years. If not, it will not be applicable. I hope it is clear this point. So here students, we have studied the important rule, that is whenever a loss is carried forward, it will be set off against the first available trading profit. It can be carried forward to indefinite period of time, but must set off the maximum or no partial claim is made, and this relief must be claimed by 5th April 2028. Now students, this is a general theory of the carry forward loss relief. Carry forward loss relief is useful as the taxpayer gets the potential of an unrestricted period over which to utilize the available loss. That is, the loss can be carried forward to an indefinite period of time, providing that the taxpayer trade continues, that the taxpayer continue to do his business, and the taxpayer makes subsequent future profits from the same trade. So the carry forward loss relief is for indefinite period of time, and the taxpayer makes subsequent future profits from which the loss relief can be claimed. However, there are a number of disadvantages of carrying loss forward. In a prolonged difficult trading period of a business, that is, if a business is incurring losses every year and carry forwarding it, it will be too long. Relief may take a long time to materialize. That means if I am carry forwarding it, if I am incurring loss for continuous 5 years, then the loss of this year will be claimed in the 6th year. It will be too much time. Obtaining relief in a later period is less advantageous from a cash flow and the time value of money perspective, that is the present value of the money. There is no certainty about the level of future trading profits and whether it will be possible to utilize the loss, and there is no certainty about the future profits, whether the business will generate profit or not. Due to the number of disadvantages of carry forward relief, taxpayers are likely to consider the alternative loss relief available. So that is the option number 1. Either you can claim option number 1 or option number 2, that is automatically carry forward, if it will be disadvantageous to many of the individuals. This is general theory, you need to have an understanding, but the important rules are that it must be set off against the trading profit, first available trading profit. It is an automatic relief, it can be carried forward to indefinite period of time, and no partial claim is allowed, and this relief must be claimed by 5th April 2028. Now students, we will be solving a question so that we have better understanding. Question: A has had the following recent tax suggested trading results. Year to 31st March 2022, loss for 21-22 he had a loss for this tax year. 31st March 2023, that is 22-23, and for the year ended 24, that is the tax year of 23-24, profit of £10,000. Assuming that A wishes to carry the loss forward, calculate his taxable trading profits for the tax years 21-22 to 23-24 inclusively. So students, here A is assuming to carry forward the loss. He is not setting off against the option number A. He is not claiming the option number 1. So he is directly carry forwarding it. So whenever the loss are carry forward, it will be set off against the trading income, first available trading income. So students, when we solve the trading loss question, we need to follow the column approach. We need to follow the column approach and we need to make a loss memorandum. Loss memorandum means we need to prepare a loss memorandum. Loss memorandum. So we need to always use this format, the columnar approach, that is first for the tax year of 21-22, 22-23 and 23-24. So our trading income will be, students, we need to calculate the trading taxable profits. For 21-22 have incurred loss and this has been carried forwarded. So 22-23 it is 3,000, 10,000. So now students, when the loss has been carried forward, the trading loss has been carried, it will be set off against the first available trading income. So less loss relief. So here it will be 0. So here 5,000, 3,000, first available trading profit, and the leftover is 2,000. So 2,000 from here. So our profits will be 0, 0 and 8,000. I hope students the income tax format is clear. Income tax computation format we have already seen. The non-saving, saving, dividend. Then we had trading income, property income, employment income, pension income and dividend saving income. This would give rise to the total income. From total income, we were claiming the relief. The first relief we studied was qualifying interest and the second relief is the loss relief, and we are covering under this chapter. So here you need to adjust the loss relief. After adjusting the relief, we will arrive to a net income, and from the net income we will reduce our PA. And do remember students, the relief and the PA, the loss relief and PA will be reduced in the same order of NSI, non-saving, saving and dividend income. This is clear. So after reducing the PA, we will arrive to our taxable income. I hope this is clear. This is the relief. Here we will mention the relief, but students, this is for the current year, the total income. Whenever we are setting the loss relief by carry forwarding it, we need to mention it here, because whenever we carry forward a loss, it will be set off against the trading income and profits only. So the format is clear. I hope the format is clear. The loss relief is claimed after the total income, but here also we will claim the loss relief, that is the carry forward loss relief. For the other loss relief, it will be mentioned here. These are the two important areas, here and here. So this will give rise to our total trading taxable income. Total trading taxable income. Now we need to prepare the loss memorandum, that is the trading loss for the year of 21-22, that is of 5,000. It is set off against less against the trading income of 22-23, 3,000 and trading income of 23-24, 2,000. Loss memorandum will give the picture how the loss has been claimed, in which year and which order the loss has been claimed. Loss memorandum gives a detail regarding how the loss was claimed, in which tax year it was claimed first, whether it was claimed from trading income, total income, or other incomes. I hope this is clear. The main point is that the carry forward loss relief will be set off against the trading income, trading profits. No partial claim is allowed, and first available trading profit, and it can be carried for indefinite period of time. Question number 2. K has been trading for many years as a retailer. Her recent tax adjusted trading results are as follows: 31st March 2022 loss, that is 21-22 tax year. March 2023 profit, so 22-23 tax year. March, year end of March 24, this is of 23-24. And students, the tax year and accounting books are aligned, so no issues. K has no other source of income. So K has no other source of income. Calculate K taxable trading income for the tax year 21-22 to 23-24, assuming she carries the loss forward. So option 1 is not selected. So first we need to draw the columns: 21-22 tax year, 22-23 tax year, 23-24 tax year. The trading income is, students, 9,000 loss, so we will not write. 6,000 profit, 19,000 profits. Excuse me. Loss memorandum. Now students, option 1 has not been selected. The option number 2, that is set of automatic relief of carry forward loss relief, is available. So this relief, this loss is carry forward, it will be set off against the first available trading profits. So loss relief, total income less reliefs. Students, please do remember, if we are setting off against the trading income, we need to mention here only. So first available, so 6,000. As students, here it is mentioned that K has no other source of income. So I am, the loss of 9,000 is carry forwarded to the next year. So students, I will not set the loss here, I will set the loss here, because my total income will be 6,000 here, and I will use my PA, so no tax, I will pay no tax. But if I set off the loss in 22-23, I will waste my PA. Can I do this? No students, we can't do this. We need to allocate the set off the loss against the first available trading profits. We can't skip it. So the first available trading profit is 6,000. So 6,000 we have reduced. So the total income is 0. So the loss memorandum trading loss for 21-22, it was 9,000. So less from trading income of 22-23, 6,000. And the next available profits are 19,000. So here it will be 3,000. So the remaining taxable trading income will be 16,000 less trading income 23-24, 3,000. So we have claimed our whole loss. So the taxable trading income for 21-22 is 0, for 22-23 is 0, and for 23-24 it is 16,000. So the main points under the carry forward loss relief, it is that it is an automatic relief, carry forward against the first available trading profit of the same trade. That means whenever we carry forward a loss, we can only set off against the same trade, that is the trading profit, and the carry forward can be done for indefinite period of time, but we can't choose the amount to set off. The whole amount needs to be set off. No partial offsets can be done. I hope this is clear. And for 23-24 loss, the claim must be made by 5th April 2028. I hope the carry forward trading loss is clear. Now moving to the loss relief against total income. As we have seen, students, an individual has two options. Option number 1 was set off against the total income, carry forward trading loss. We have now already we have seen the rules for carry forward trading loss. Now we will be seeing the rules for total income. This is carry forward, that is it will be set off against the next year, but if an individual claims the option 1, we will set off against the total income. So students, loss relief against total income. A taxpayer making a loss in the tax year 23-24 has the option to make a claim against total income. We have already seen this is an option which is available with the taxpayer. Option 1, option 2. Option 1 is the claims against the total income. If option 1 is not selected, directly the loss will be carried for automatically the loss will be carried forwarded to the next year. So a taxpayer making a loss in the tax year 23-24 has the option to make a claim against total income. Relief against total income is optional, but if claimed, it permits the taxpayer to relieve, it is an optional, to relieve trading losses against the total income of the tax year of the loss and or previous tax year. So students, if an individual selects the option 1, that is option 1 is selected to claim the loss against the total income, then the losses can be set off against the total income of the tax year of the loss, that is 23-24 and or previous tax year. We can set off the loss against the current year tax total income and previous year tax. This is clear. The loss can be set off against the current year total income and previous year tax also. Current year and previous tax year also. A claim may be made in either year in isolation or both years in any order. So students, either we can set off the loss in previous year or current tax year. Either year in isolation, that is either we can claim in the current tax year, the loss can be set off against the tax year of the loss against the total income of the tax year of the loss, or we can set off against the previous tax years. In isolation means first we will set off against the tax year of the loss. If further loss is there, we can set off against the previous tax year. A claim may be made in either year in isolation, that is in this year, or in both the tax years, in whichever order, no issues of the order. So students, this means here that an individual having a loss, having trading loss previous year, current year and future year, if no claim is made students, if no claim is made, directly carry forward it. If claim is made, we can set off against the current year total income or previous year total income. Now, to set off the trading loss of current year, either in isolation we can set off against the current year, or either in both the years, that is students, previous year and current year. Now, in which order should I start? The current year loss, either I can set off against the current year, the current tax year total income, or I can set off for the previous year. Now, you can either start from previous tax year and move to future tax year, the loss relief claim, or you can start from previous year, then move to carry forward, then the current year, then for the future year. I hope this is clear. This is very simple students. Here there is no order to claim the relief. If option not selected, directly carry forward. If option selected to claim against the total income, so the total income of previous year and current year, for both we can set off, but we have in that also we have options. Either we can start from the current year or directly from previous year. Now, if I set off the loss in previous year, then I can carry forward it directly to the future years, or either can I set off against the previous year, come to the current year, then future year. I hope this is clear. First we studied the carry forward loss relief rule. Now we are covering the loss relief against total income. If you want to set off the loss against the total income, we need to make the claim that it is an option. The individual will select this option, that I will set off the loss against the total income. Now the total income of which year? You can set off against the current year also and previous year also. Now when I will set off the current year loss, I can start from current year, then go back to previous year, then to future year. Or I have current year loss, directly I can set off this loss from previous year first, then come to current year, then to future years. First from previous year to current year, then from current to future year. Or if I start from previous year, I can directly carry forward it. I hope this is clear. Obtaining reliefs for the losses. Due to the wording and or and the fact that a claim can be made in any order, the taxpayer has 5 key options to consider. Set against total income of the tax year of loss, that is the current year, and then set against total income of previous tax year. First set off the current year, then move to previous year. Or set against the total income of the previous tax years. First you will set off against the previous tax year, then against total income of the current year. Vice versa, current year, previous year, current year. Or set against total income of the tax year of the loss only, that is the loss, the tax year in which you have lost, set off in this year only. No need to go back, you can directly go carry forward, you can directly carry forward. These are the options or reliefs which are available, students. These are the multiple options which an individual have. We will decide which way we will select. Mostly every business will select to set off from the previous year, because they will get refund, because they have already paid the tax, they will get refund. So set against total income of previous tax only, that means I can set off against the current tax year only, directly move to carry forward if further loss is there. Or I can set off against the previous year only, and if further loss, carry forward it. Make no claim and carry all of the loss forward. In the case of the fourth options, any unrelieved loss is carried forward automatically. So students, if make no claim and carry all of the loss forward, in the case of first four options, any unrelieved losses is carried forward automatically. So no claim is made, it will be automatically carry forwarded. So these are the 5 options. But in the case of first 4 options, any unrelieved losses carry forward automatically. So students, basically if we have set off against the current year, then previous year, still we have further loss, it will be automatically carry forward. If we set off against the previous year, then we come to the current year, then it will be automatically carry forward. If we only set off against the current year, we will not set off against the previous year. Here we set off against, it will carry forward to next year. If we set off against the previous year and no current year, then it will automatically be carry forwarded to the next year. So I hope these options are clear here. This is a separate point. These are the 5 options, and in the case of first 4 option, any unrelieved loss is carry forward automatically. Carry forward is an automatic relief. However, a key point to note is that if relief against total income is claimed, the taxpayer must set off the maximum amount possible for a given year. A partial claim is not allowed. So partial claim is not allowed. Same in the case of carry forward. So we can't select or elect the amount which we want to set off. We need to set off the whole loss against the whole income of that tax year. Other points to note: personal allowance is deducted from net income. This it is clear. Total income after deducting relief, that is total income less relief, we will get our net income. From this we will deduct our PA. Therefore, a claim for a loss relief against total income may result in the personal allowance being wasted, trading losses for individuals. So students, we have seen here that the personal allowance is deducted from trading income. It is from the trading income. And students, if the loss relief is claimed before the net income, so this will lead to the wastage of our personal allowance. Students, please do remember the format. Total income less relief will give rise to net income, and from net income will reduce our PA. If we claim the relief such that our net income is 0, then our PA will get wasted. So in this case, we are not allowed to use the partial claim is not allowed. If partial claim is allowed, then we can save the PA, but it is not allowed by HMRC. Trading losses for individuals, the saving income nil rate band and dividend nil rate band could also be wasted if a claim is made to use the loss against total income. So students, if we set off the losses against the total income and our total income is 0, then our nil rate band of saving and dividend will be wasted, because PA also we can't transfer to next year and nil rate band also we can't transfer to next year. So these will be wasted. A claim must be made within 1 year of 31st Jan following the end of the tax year of loss. For a 23-24 loss, the claim must be made by 31st Jan 2026. So the option must be selected by the taxpayer by 31st Jan 2026. That is 1 year of 31st Jan following the end of the tax year. So 23-24 tax year, the 31st Jan 25 will come, but a claim must be made within 1 year of 31st Jan following the end of the tax, from year 1 year. So it will be 31st Jan 2026. Do not confuse students between this line. Please do keep in mind this, 31st Jan 2026. The claim must be made by 31st Jan 2026. I hope this is clear. A taxpayer may have losses for 2 consecutive tax years and wish to relieve both against total income. In these circumstances, the total income of tax year is relieved by the loss of that year. That is if tax loss in current year, relieve against its current period total income in priority to the loss carried back from the following tax year. That means students, 23-24, 24-25 I had a loss. So this year loss and this year loss will be both, and if we have loss, this year loss will set off against the total income. We should not carry back. Why students? Here also we have a loss. If we'll carry back, it will be too much. Then again we need to bring it forward. So instead we need to set, if we have a loss against 2 consecutive loss, then set it off against the total income of that year. Do not carry back it. If you carry back, you can, but if here also you have a loss, then this year loss you will be bringing forward. If you're taking here this loss and again you bring forward, so it is like rotation in a circle. So if 2 consecutive tax year you have a loss, then you need to set it off against that year's total income. Now students, we will be doing some question of the claiming the relief against the total income. Our recent tax adjusted trading results are March 31st March 2022, 21-22 tax year, March 23, 22-23 tax year, 23-24, 24-25. So now students, R has other income each year 12,000 pounds. So other incomes are 12,000. Show our net income for all tax years affected assuming no claim. The A part is no claim is made against total income for trading losses. So we have not made the claim to set up against the total income. So it will be automatically carry forwarded. It will automatically be carry forward. So now first we will draw the amount, the column for each tax year. We need to draw the column for each tax year 24-25. So now students, the first one was the other income. So trading income for 220 is 18,000. For 22-23 loss, 23-24 30,000 pounds, 24-25 15,000 pounds. I hope this is clear. Now other incomes is 12,000 for each year. This is clear. So this will give rise to our total income. Our total income will be students 30,000. Now before that, sorry, now we need to see the loss relief. No claim is made against total income for the trading losses. So directly carry forward. So students, for 22-23. So 23 we have incurred. So here it will be 30,000 total income. Now students, this year we had a loss. We are not making to set off against the total income. So students, this year loss will be carry forward and will set off against carry forward loss will be set off against the trading income only. I hope it is clear. I hope this is clear. So this 43,200 loss memorandum trading loss in 22-23 of 43,200 will be carry forward. We are not claiming here, student. It is specifically mentioned in the question. No claim is made against the total income. So only carry forward loss relief. Carry forward, it will be set up against the first available trading profit. So trading income here is only 13,000. So the whole 13,000 will claim the relief. So our profit will be 12. Now next year 15,000. So our income will only be 12,000. Here we are not claiming against the total income, students. Please do keep in mind. So less trading profit of 23-24, trading profit of 24-25, 15,000, and this amount is 13,000. So the remaining loss will be, students, the remaining loss will be, which will be carry forwarded. The remaining loss which will be carry forwarded will be, so 43,200 minus 13,000 minus 18,000. So 12,200 will be automatically carry forward to the next year. That is the 25-26 tax year. I hope this is clear. Students, in the A part, no claim was made against the total income. Now coming to the B, claim against total income are made to obtain relief for the loss as early as possible. As early as possible, we need to make the claim. Now coming to the B part, same. First, we'll make the columns 21-22, 22-23, 23-24, 24-25. Now trading income for this year, it was, students, so for this year the trading income was, students, for this year the trading income was 18,000. 0 here it was 13,000, 15,000. Now we had other incomes. Other incomes were 12,000 each year. I hope this is clear to all of them. This will give rise to our total income. Before that, we need to claim the relief. Now students, first we will record our loss memorandum. Loss memorandum. Trading loss in the tax year of 22-23 is 43,200 students. Now less in which we will claim now. Now students, here it is mentioned in the question that as early as possible we need to claim the relief. So as early as possible means we have two options. Claim against total income is made. So claim against total income is made means we need to set it off. So total income, then total income of this year is 12,000 and we can set off against the previous year also. Total relief against the total income current year we can set it off, current year and also previous year, either in isolation or together. But here students, they have mentioned the loss relief must be made as early as possible. So as early as possible means we will set off against first 21-22. Either we can set off 22-23 and carry forward. Either 22-23, 21-22 then carry forward, or 22-23 carry forward, 21-22 carry forward. But students, they already mentioned that we are claiming against the total income and as early as possible. So as early as possible we set off against the previous. We'll set off against the previous year. We'll set off against the previous year. Previous year total income. Now the total income of previous year is 30,000. So less relief. So the whole 30,000 will be reduced because our loss is 43,000. So 21, 22, it is 30,000. Now the remaining loss is still 13,200 students. Now we can set off against the current year. So current year it will be 12,000. It will be 12,000. It will be 12,000. So our net income will be students 0. Here also it will be 0. It is against the, we are claiming the, first we are claiming the total income. We are claiming against the total income. So we have claimed it. So further 12,000. So 20 to 23 less total income, not trading income. Now less. So the remaining loss is still students. So still we have a remaining loss of minus 43,200 minus 30,000 minus 12,000. Still 1,200 loss is that. So we can carry forward it. And when we carry forward it, it will be set off against the trading income only students. Please do keep in mind. So here 1,200. So our total income will be students here. So our total income will be 13,000 minus 1,200 plus 12,000. It will be 23,800 and this will remain the same. 15,000 plus 12,000 will remain 27,000. No relief. So 23,800, 27,000. So now students, we have for trading income, this is trading income students, trading income of 23-24 because it is carry forward. So 1,200. So whole loss has been utilized. I hope this question has given a good understanding of the topic of loss relief claim against the total income. So the loss relief, if an individual elects the option to set off against the total income, then total income of the current year and previous year he can set off. Either he can set off in isolation for both the years or either in both the years. So we had seen either the person can set off against the current year and directly carry forward to future years, or the second option was set off in the previous year and then carry forward to the current year and then carry forward relief. The third case, either start from previous year and directly carry forward to future years, or no set off against any year, directly carry forward relief. Excuse me. I hope this is clear, students. The first case was, we'll set off against the current year, any remaining will be carry forwarded. We will set off against the current year, we will move to previous year and then future years. Then either set off against the current year, carry forward, we have done already this, or the other option is from previous year to future years, or previous year start, then set off against the current year, then future year. So these are the options which are available. This is clear, I hope. And no partial claim is allowed, because if an individual will think that I can claim a particular amount so that I can save personal amount, it is not allowed, students. Let's take an example that 20,000 I have lost and I have a carry forward loss of 30,000. So if my 12,570 is my PA, so I will only set off the loss from the next year trading profit of 7,430, so that my PA will not be wasted and will not pay any tax. This is not allowed by HMRC. The whole amount needs to be reduced. That is 30,000 means 20,000 whole it will reduce. The whole loss must be set off against the first available trading profit. So no partial claim is allowed either in the carry forward and lost against the total income. Now students, moving to the next case, relief of trading loss against chargeable gains. We have seen in a flow chart that either if no option is claimed, directly carry forward. If option is claimed, set off against the total income. If further loss is there, we can set off against the chargeable gains or directly carry forward. After selecting the option to set off against the total income, we will set off. If we have further loss here, then we can carry forward it or we can set off against the chargeable gains. After setting off against the chargeable gains, we further have loss, we will carry forward it. So now we will be studying the rules and regulations for chargeable gains. We have covered the carry forward loss relief, relief against total income. Now chargeable gain case. Relief of trading losses against chargeable gains. If any loss remains after a claim against total income, that means set offing the loss against the total income. If further loss remains, a taxpayer can make a claim against chargeable gains. That means after setting off the losses from the taxable income, further loss is available, we or the taxpayer can make a claim against chargeable gains. Relief against chargeable gain is optional, but if claimed, it permits the taxpayer to relieve trading losses against the chargeable gains in the same tax year as a claim against total income in the tax year of loss or previous tax year. So students, it is the same case as the total income, but here also we can set off against the current year and previous tax year. Taxpayer, a relief against chargeable gain is optional. It is optional. If we choose that option, we will claim. If not, it will be automatically carry forwarded. But if claimed, it permits the taxpayer to relieve trading losses against the chargeable gains in the same tax year as a claim against total income, that is in the tax year of loss and or previous tax year. A claim can be made in either year in isolation or both years in any order. So students, the same rules apply here. That is, if I set off against my total income, then I can also option is available to set off against the chargeable gains. If not opted, against carry forward, directly carry forward, no issues. If not, we have the option. If we choose the option, then it will be set off against the chargeable gains. And students, as we have seen that the loss can be set off against the total income of current year or previous year, or either after setting off against the total income, then only we can claim the chargeable gains. Only after claiming against the total income we can claim it. So if I start in current year, I set off it, no issue. I set off against the total income. Either I have an option to set off against the chargeable gains or carry forward it. This is good. If I start from previous year, then total income, then I can carry forward. No, I'll set off against the chargeable income. If you opt, then carry forward it. I hope this is clear. So the chargeable gains will only be available if we claim against the total income is made first. Relief operates as follows. A trader is permitted to set unrelieved trading losses against chargeable gains, provided the maximum possible amount is offset against the total income of the tax year in question first. That is means, students, first we need to set off the loss against the total income first, the maximum possible amount which we can set off. We will be studying what is the maximum amount till we can set off the amount, the loss. So first claim against the total income, then chargeable gains will be available. There is no need to make a claim against total income for previous tax year, but relief against chargeable gain is only granted if the maximum amount of loss is offset against total income in the same tax year. So students, to claim, I have set off my current year trading the total income. Then I have the option to set off against the chargeable gain. To set off against the chargeable gain, the only condition is that we need to set off against the total income of the current year, not the previous year. Not previous year. Because previous years also we have the total income. But here it is mentioned that there is no need to make a claim against total income for the previous tax year. So there is no need to claim against the total income. Then only we can claim. No, students. If current year total income you have claimed, then you can set off against the chargeable gain. I hope this is clear. It is not necessary that current year total income you claimed, previous year you claimed, then only you can come to chargeable. No, students. Current year, previous year. Keep it basic. For current year, total income set off, then chargeable gains will be applicable. But relief against chargeable gain is only granted if the maximum amount of loss is set off against the total income in the same tax year first, that is total income reduced to nil if no restriction applies. If claimed, the unrelieved trading losses is treated as current year capital losses. If claimed and the unrelieved trading losses is treated as current year capital losses. I hope this is clear, students. The remaining loss will be the trading loss. Either we can start by previous year, set off against total income, chargeable gains, or current year total income, chargeable gains, or carry forward. We have seen these 5 options, no issues in that. So chargeable gain is also an option which is available after setting off against the total income, but it is not necessary to set off the total income of previous year also. If you set off the total income of current year, then you can use the chargeable gains of current year. Previous year you have used the set off against the total income, then chargeable gain you can set it off. So now students, now we will be studying the maximum amount. How? The maximum amount which we can set off against the chargeable gains. This is a format which we will be learning in more detail under the capital gains tax, but we need to learn here the basic format so that we can have a basic idea what is the maximum amount which we can claim for against the chargeable gains. The loss is deducted before both CGT and CGT annual exempt amount AEA and capital loss brought forward as follows. So students, do not get confused with this term. These are all the new terms we will be seeing. No issues. Now, chargeable gains in the year. Chargeable gains means if I am selling any asset, I get a gain in that year, whatever is my chargeable gain. Then the second step is less capital loss in that year, less trading loss relief. So in this format, when we calculate our chargeable gains on which we will be taxing. This is the format. So current year gains less current year capital losses less trading loss relief subjected to maximum amount. This maximum amount we need to learn. What is the maximum amount which we can claim? Then less AEA. AEA is annual exempt amount. This is like PA, students. For income tax we have PA. On this amount no income tax. Same for capital gain tax we have AEA. On this is an deduction for all the individuals. It is available for all individuals on which no capital gain tax will be calculated. So this will give rise to a net chargeable gains before brought forward losses. So the AE is only 6,000 for this year, students. This will change every finance act. Only keep this format in mind, students. This will be learning in more detail under CGT. This why we are learning to calculate the maximum amount on which the maximum chargeable gains which is eligible for loss relief. A key point to note is that if a claim is made against chargeable gains, the taxpayer must set off the maximum amount possible for a given year. A partial claim is not allowed. So here also no partial claim. The maximum amount of loss relief under this rule is less, that is lower of remaining loss or chargeable gains in the tax year after the deduction of current year capital loss and brought forward losses. So students, let's take an example. So 10,000 pound loss I have. So my total income is 5,000. I set it off. So my remaining loss is 5,000. Now I have the option to set off against the chargeable gains. So chargeable gains. Now what is the maximum amount of chargeable gains which is eligible for this set off? So for this you need to calculate this. The maximum amount of loss relief is lower of two things. Remaining loss is 5,000 plus, that is the second option, chargeable gains in the current year. So the chargeable gain is 2,000, students. So 2,000 after the deduction of current year capital loss, that is the current year capital, and brought forward capital losses. So students, so current year gain is 20,000 pounds. My capital loss is 10,000 pounds and my brought forward losses are 2,000 pounds. So the current year, the maximum amount will be 8,000. So 5,000 or 8,000, which will be, students? So 8,000. So the maximum is lower. So 5,000 whole we can set off against the chargeable gains. This why we are calculating, students, this maximum amount to find the capital gains which is left over to deduct for the trading loss. And when coming to the CGT format, how this trading loss will be reduced? First, chargeable gains, capital losses less trading loss relief less AEA, we will arrive to the net chargeable gains before brought forward losses. This is before brought forward losses. I hope this is clear, students. This part is clear. We are calculating the amount. The maximum amount which we can claim under the chargeable gains. So this will be lower of two things. And this loss relief which we claim under the CGT format, it will be reduced after the capital loss in the year, less trading loss relief, less AEA, less brought forward losses, you will arrive to the taxable gain of CGT. This is the format. As we have a format for income tax, we have for CGT also this format. I hope this is clear, students. Now we will be seeing the question so that we have better understanding. Trading losses against chargeable gains. C made a trading profit of 3,000 in the year ended 31st March 2024. So the year end and the tax year are aligned, and a trading loss of 14,000 of the following year. So next year, and had a trading loss the following year. They have other incomes of 4,500. In 23-24 tax year and also realized chargeable gains of 26,000 and capital loss of 5,000 in that tax year. Calculate the amount that remains in charge to tax for the tax year 23-24, assuming that C claims loss relief against both total income and chargeable gains for that tax year, but no claims in respect of any other tax year. So here students, they have clearly mentioned that we are opting for the relief against total income then chargeable gain, but only to the tax year. We can't set off against the previous tax year. So students, we will prepare the column. So 23-24 and a trading loss of 14,000 the following next year. Following next year students. So following next year will be 24-25. So the trading profits are 3,000 and here we have a loss, and had other incomes they have mentioned 4,000. Other income students is 4,500. I hope this is clear. This is clear. So student, this is not the next year, sorry, this is the following year, the same year. Sorry, my mistake. This is the same year students. This is the same year. This is the same year. Or it is the next year. And a trading loss of 14,000 the following year. So it is next year only students. My mistake, my bad. So 4,500. Now students, they have other incomes of 4,000 in 23-24 tax year and also realized chargeable gains of 26,000 and capital loss of 5,000 in that tax year. So other income is only for 23-24. So for 24-25 nothing they have given students, no income. And the capital loss and capital gains have been given. So now we will set up, calculate the amount that remains in charge to the tax for the tax year 23-24, assuming that C claims loss relief against both total income and chargeable gain. So the first we will set off against the total income, because this year we will write the loss memorandum students here. So trading loss for 24-25 of 14,000 less against the 23-24 total income. So it is 3,000 plus 7,500 total income students, less relief. This is no current year income. So previous year total income 7,500. Then we have other option to claim against the chargeable gain. We can claim, in the question it is specified that C is using it. So we need to calculate the maximum amount. Maximum amount will be students lower of two things. Remaining loss will be 14,000 minus 7,500, 6,500. So the remaining loss is 6,500. And the second option is current year capital gains of current year, capital loss of current year, and brought forward capital loss. So this will be students, the capital gain is 26,000 less capital loss of tax year is 5,000, no brought forward loss, so it is 21,000. So the maximum amount we can set up is 6,500. So the maximum amount will be 6,500 students. So now less 23-24 chargeable gains of 6,500. So students, our net income will be 0. So our taxable income will be 0. But when coming to CGT have seen current year gains 26,000 less loss of current year, capital loss of current year 5,000 less trade loss relief set off. Trade loss relief is 6,500, 6,500 students. Then less AEA is 6,000 and less brought forward losses, no brought forward losses students. So this will be the taxable income on which CGT will be paid. So this will be 26,000 minus 5,000 minus 6,500 minus 6,000, 8,500. On this amount CGT will be paid. This we will be covering in more detail under the CGT, but students, you need to remember this formula. The maximum annual amount which is eligible for loss relief against chargeable gains, that is lower of remaining amount or current year gain minus current year loss less brought forward losses, that amount whichever is lower we can claim. If let's take this example, and here we had a loss of 6,500 and only here we had 2,000 students. So 2,000 we can set off and the further loss will be carry forward. Further we will carry forward. The remaining will be 4,500 we will carry forward. If we had this case. Now students, I hope by solving this question you have a clear-cut idea of the claims against the chargeable gains. So first we covered students option 1, option 2. If option 1 is selected, then set off against the total income of current year and previous year. No partial claim is allowed. Then further option is available to set off against the chargeable gains current year and previous year. If we will not select to set off against the chargeable gains, then the profit will be directly carry forwarded to the next year. If we elect, then we'll set off. If further amount is left over, it will be carry forward to the future years. Carry forward. And we have already seen students the maximum amount on which we can claim the relief, the relief on the chargeable gain is lower of the remaining amount, the remaining loss value, and the second one is chargeable gain in that year after deduction of current year capital losses and brought forward losses. This amount, these two amount lower will be the maximum amount relief against the chargeable gains. If further amount is left, shift to carry forward relief. We have seen the amount limit for chargeable gains. Now we will be seeing the maximum deduction from total income. What is the maximum amount we can deduct from the total income? Students, we have seen the total income. We can set off the loss against the total income of current year or previous year, or if not select this option, directly carry forward for the future years, carry forward it for the future year. So students, now coming to the total income of current year. So the total income of current year will include the trading income also. If the net figure is in loss, then no issue. If it is, we need to set off, we need to find the net income, the net figure. So taking an example that our net figure, the net trading income is in loss. So this year total income will be the employment income, either some pension income or property income. So now students, now these are the total income. The total income will include trading income also and other incomes, employment, property and this. But students, the restriction or the maximum restriction we will be studying now will only apply to these income. It will not apply to trading income. This you keep in mind. Current year you will not be having any trading income, no issues in the current year. But coming to previous year, you will be having trading income also and employment income and total. But when you are setting it off the loss against the previous year, trading income no restriction. You can set off whole amount. You can set off whole. But when coming to the other incomes, we have some restriction of the amount. So now we will be seeing. There is a limit on the amount of relief that can be deducted when a claim is made against total income. We have seen the restriction in chargeable gains. Now restriction for total income. The maximum deduction for total income is greater of 2. 50,000 or 20% of the adjusted total income. So the maximum we can claim deduction on total income is 50,000 or 25% of the total adjusted total income. What is ATI? Adjusted total income for the tax examination is calculated as follows. Total income less gross personal pension contribution will give rise to the total adjusted income. I hope this is clear, students. In our PA we had seen the adjusted income. We had seen the adjusted income, students. This is different. We had seen the adjusted income there. In a case of adjusted income, we were taking the net income. Net income minus gifted donation minus less gross amount of personal pension contribution. But it is here adjusted total income, ATI. I hope this is clear. But students, please do remember, in our pension chapter also, we were calculating a figure like this. We were calculating a figure like this. Please do revise the rules. And under the pension income, students, as we have seen, for the PA we were calculating the AI. For PA we were calculating the AI. But coming to the pension, we were calculating the adjusted income. Adjusted income to see whether our annual allowance will get tapered or not. I hope it is clear. That is, but here we are calculating the adjusted total income. Adjusted income we had calculated under the pension. And in a personal loan we calculated the ANI, adjusted net income. And in pension, adjusted income. Here adjusted total income. So the maximum deduction for total income is higher of two things, 50,000 or adjusted total income. Adjusted total income is ATI. For the tax, your calculation is this: total income less gross personal pension contribution. So this will give rise to the adjusted total income into 25%. Note that the restriction will be 50,000 unless the individual's ATI exceeds 200,000 pounds, because 200,000 25 is 50,000. If the ATI exceeds 200,000 pounds, this will increase and this figure will be considered. The limit applies to trading loss set against current year total income and the prior year if set against income other than profits of the same trade. So students, as already mentioned by me, this restriction applies to current year total income, and if we are setting it off against the previous tax year, but it will again apply to other incomes but not the same trade. It will not apply to the trading profit. This restriction only applies to the other incomes other than trading income. It does not apply where the trading loss is set against profit from the same trade of an earlier year. That is earlier year. Do not confuse with the carry forward year, students. This is previous year, the total income. So previous year, this restriction will not apply to the trading profits. Note that in this instance, trading loss are set against trading income from the same trade before income from other source. I hope this is clear. Now we will be doing a question. As we have seen the restriction for AEA, maximum of lower of two things, remaining loss and deduction from the current year gain less current year loss less brought forward loss, maximum deduction for the other income, that is total income other than trading income, that is 50,000 or 20% of the adjusted total income. Adjusted total income, students, is total income less personal pension contribution. As we have already seen these types of calculation under the ANI, adjusted net income for PA, adjusted income for pensions, to see whether the annual allowance will get tapered or not. I hope this is clear, students. Now we will be doing a question so that we have better understanding. We have seen the reliefs, carry forward, future relief. There no restriction on the amount, directly carry forward and set off against the trading profit. But option 1 is selected, total income, from total income, but we have a maximum limit. That maximum limit we are studying now. S is a sole trader and has adjusted trading results as followed. So student, S is a sole trader, has tax adjusted trading results. Year ended 31st March 2023, that is 22-23 tax year, and year ended 31st March 2024, 127,800. Till here, I hope this question is clear. Now moving forward to our question. She has saving income of 63,000 pounds, a saving income of 67,000 pounds, 63,000 pounds each year, but no other income. So a saving income is that, no other income is that. So NSI and saving income. She makes gross pension contribution to the scheme of 5,725. This is already gross. She wishes, so if nothing was mentioned student, if net, how we used to gross it? 1000 divided by 80% to gross it up. I hope you remember this gross and net. Now, so has a saving income of 63,000 pounds and personal pension contribution of 5,725 pounds each year. She wishes to offset the trading losses against her total income for the tax year 23-24 and then 22-23. Calculate as taxable income for the tax year 22-23 and 23-24. Assuming that tax rates and allowance for the tax year 23 and 24 apply throughout. So the tax rates and allowance apply throughout, because students, I mentioned there will be some factors which will influence the relief which will claim. We'll be studying further, but here they have mentioned the rates and allowance for the tax year applies throughout. It will be same. We'll be covering the factors also, no issues. Now coming, she wishes to offset the trading loss against her total income for the tax year 23-24 and then, so first current year, then she'll move to previous year. She'll not start from previous year, she'll start from current year and then previous year. Now students, first we will draw the column. So 22-23 tax year, 23-24 tax year. So we had adjusted trading profits. This year 64,000, this year loss, no consideration, but she had a saving income each year. So saving income, this will also come under the total income at 63,000, 63,000. Then students, any other income? No other income. So it will be total income. Now students, now we need to 63,000 pounds. Here 64 plus 63, 127. Now we need to draw the loss memorandum first. Loss memorandum, that is trading losses in the year of 23-24 of 127,800. Now less. Now as it has already mentioned that she will offset her against the total income of tax year 23-24 and then 22-23. So 23-24 total other income. Option 1 total income. So total income 60. But we have a maximum restriction on the total income. So the maximum amount for 23-24 will be students. Maximum amount will be higher of two things. Higher of two things, it will be 50,000 or 25% of the ATI. So the adjusted total income will be total income less students, ATI is total income less PPC will give rise to ATI. So here it is students, the total income here is 63,000 and less PPC less PPC of 5,725. So our ATI will be, students, 57,275 into 25%, 57,275. So 50,000 will be the higher, because this will give to a figure of 57,275 into 25%, 14,319. So this is higher. So only 50,000 we can claim, students. So less 50,000, loss relief of 50,000. So total income restricted, that is total for the tax year 23-24, we claimed 50,000. So the net income will be, students, we need to calculate it. But before that, we have set off 50,000. The remaining is that. Now previous year, students, previous year first we'll set off against the trading profit. Trading profit 64,000. So trading profits, that is total profits, total income of 22-23. Now students, the restriction will apply to trading profits or no, students? As it is already mentioned, this will not same trade. The limits will not apply to same trade, only to other income. So trading income 64,000 we can claim, but saving income 63,000. We need to calculate the maximum higher value, 50,000, and this. So 50,000 plus 64,000 we can claim, students. 64,000 plus 50,000 we can claim 144. But our remaining loss is how much, students? Our remaining loss is 127,800 minus 55,000, 77,800. So our remaining loss is this one. But the amount which is eligible for relief is 64,000 plus 50,000. It is 114,000, but the loss is only this much. So this first it will reduce the trading profit and this. So here we will claim the loss relief of 77,800. I hope this is clear, students. 77,800, because the relief is available for more amount, but the loss remaining is less. So the net income will be 127,000 minus 64,000, then 3,008. It will be 49,200. Students, please do remember, first it will be reduced from the same trade, then the total income, but the restriction will only apply to the total income. Please do clear in mind. And this will be 13,000. And we need to calculate the taxable income. So the taxable income will be less PA. So the PA will be full amount, because the ANI is not more than 100,000 pounds. So this will give rise to our taxable income, students. So our taxable income will be 36,630, and for this it will be 430. I hope by solving this question we are clear with the topic. Now we have already seen the rules for the ongoing years. Ongoing years, students, we have seen that ongoing years. Option 1, option 2. Option 1 was adjust against the total income of the current year. Relief against the total income, or carry forward. If not, option 2 will automatically be applicable. Carry forward, we have studied the rules. If we carry forward the loss, it will only be set off against the first available future trading profit, and no partial claim can be made. Then if option 1 is selected, we can set off against the total income. Total income of current year and previous year. And we had studied the maximum amount which we can claim is higher of two things. Maximum is higher of two things, that is students. First one is the 50,000, 25% of ATI. ATI is adjusted total income, that is total income less PA not, PPC. We will arrive to our ATI. So this is the maximum amount we can set off against the total. But students, when we set off the trading income, the income which we set off against the previous total income, in total income we have trading income and other incomes also. Other incomes include students, employment income, pension income, property income, etc. So the restriction will only apply to this. This restriction will apply to this. But for trading income, this restriction will not apply. I hope this is clear. Then if further loss is remaining, either we have two options again. We can directly carry forward it or set off against the chargeable gains. So chargeable gains. We have seen the maximum amount eligible for losses. Maximum is higher, lower of two things. Here it is higher of, here it is lower of 1 and 2. Lower of means here it is remaining loss. Second one is current year gains less current year loss minus brought forward loss. So whichever is the lower, that amount we can claim. And if after claiming the chargeable gain, further amount we have, we will set off against it will be automatically carry forward. And chargeable gain, no partial claim allowed. Total income also no partial claim allowed. And carry forward also no claim allowed. Now students, we have covered this all. Now we need to see which relief will be elected. In our questions which we have done till now, they have specified which year you will set off first, which year you will not set off. But what are the factors which we will use to consider which relief we will select? We will be covering further. So I'll give a brief, first the factors which affect the loss relief is marginal rate, that is highest tax paid. Then the second one is as soon as possible. These are the factors which will affect students, which will affect our loss relief claiming order. Then amount of PA or nil rate band wasted. We'll be covering further in detail, no issue. We've just given an introduction. So I hope the loss relief for ongoing years is clear. Now students, we will be covering the relief for trading loss in opening years. Relief, this is an extra relief which is available. This is an extra relief. Students, loss relief in opening years. Loss relief in opening years means when I am starting my new business and for certain period of time I am incurring loss, how will I claim the loss? The option available in the opening tax years of trade are exactly the same as those available on an ongoing business, with one extra option to carry back loss 3 years against total income. So students, if I have started a business, let's take an example. I have started my business on 1st April 2019. So 19-20 will be my first tax year, 20-21, 21-22 and 22-23. So students, this is my year. Now I have started my business on 1st April. So this year I generate a £1,000 profit. The next year I generate £500 profit. But for 21-23 I will not generate a profit. I will have a loss of £2,000. And for next year, £3,000 profit. So students, this is the case of when I have started a business. So the option available in opening tax years of trade are exactly the same as the loss, that is those available to ongoing business. So as students, this is an ongoing year. We have started a business a long ago and we have lost. So whatever we have studied till here, the ongoing rules we will apply. But students, we have an extra benefit with one extra option to carry back losses 3 years against total income. And students, the losses which we can carry back against for 3 years against total income are the losses which are incurred in first 4 years of the trade. First 4 years of the trade, students. First 4 years of the trade. We'll be covering more in detail. So the choice can be summarized as loss relief in opening years. First one is the same as ongoing years, ongoing option, or carry forward directly. And if relief against total income, further option of chargeable gains, then remaining loss. But we have a special 3 years carry back relief. Special 3 years carry back relief. Then after 3 years, then again this year. If I hope this format is clear, this flow chart is clear, students. Everything is same. This portion is everything is same, but we are getting an additional option. We have an additional option. We have an additional option known as special 3-year back relief. If a trading losses occurs in the opening year, the trader has to decide whether to claim normal loss relief against total income, special opening year loss relief, or to carry forward the loss relief. Either option is to choose this or option number this. If they choose this option, then come to this option again. Then carry forward. If not, this. So students, we will be covering when will this be available. Special opening year loss relief. As an alternative to or in addition to a claim against total income, the taxpayer can make a special opening year loss relief. That is, this special opening loss relief will only be against the total income. Option claim applies to loss arising in any of the first 4 tax year of trading. So this opening year loss relief will be available, students, only if in the first 4 tax years you have incurred a loss, that is 1, 2, 3 and 4. So for the first 4 tax years you have incurred the loss, so this relief will be available. This extra relief will be available. If it was not available, we were using the ongoing rule, but we have further option of opening loss relief because the losses have been incurred in the first 4 tax years of starting the trade. If claimed set off against the total income in 3 years before tax year of loss on FIFO basis. So students, the loss we can either use the ongoing rule or the special rule. So if we use the special rule, we can set off against the total income in 3 years before tax year of loss. This is current for 3 previous year tax. For 3 previous tax year we can set off on a FIFO basis, that is first in first out. So in our case, in our example, students, this year if we are opting the opening year loss relief, so this we can set off against previous 3 tax years, that is 2021, 1920 and 1890. But in which format? From year. So students, we will set off previous 3 tax years, but in LIFO basis, that is first you will set off against 1890, second 1920 and third 2021. So if the special rule is opted by the individual, it will be applicable when if loss is arising in first 4 tax year of trading. So the trading income will be set off against previous 3 tax year in FIFO basis. There is no need for the trade to have been carried on in the earlier year. No need whether you have a business previously. So if our current year is 23-24 and we are starting this year only our business and we have 10,000 pound loss, so this can be set off against the previous 3 tax years total income. Total income. In previous 3 tax years we were not doing any business, but also we can carry forward. This is known as special opening year relief. One claim covers all 3 years. For example, loss in 31st 3/24 will set off against 2021, because in FIFO basis we need to set off 21-22, 22-23. If claimed, must set off maximum amount possible. We have studied the maximum amount against the total income, that is higher of 50,000 or 25% of the ATI. Cannot restrict, set off, preserve the personal allowance, means no partial claim is allowed. We can't restrict the amount. Therefore, the benefits of personal allowance may be wasted if a claim is made. If a claim is made, that is no partial claim is allowed, it will waste our personal allowance. For 23-24 loss, the claim must be made by 31st Jan 2026. That is same 2 years. It must be made by 31st Jan 2026. So I hope this is clear, students. And students, when we set off against the total income, we can't set off against the capital gains. We can't set off against the capital gains. Please do keep in mind. See here, students, we have done this format. Special rule, 3-year tax relief against the total income. Then current year total income, then chargeable gain. In that you can use. So these are the options which an individual can use to set off it. So this opening year rule is a special rule, student. This is a special rule. This is a special rule which is applicable for businesses which have incurred losses in the first 4 years of the first 4 tax years of their trade. We can claim this, then we can move to the relief against total income. But the restriction applies here also. So now, students, we will be doing a question so that we have a better understanding of this. C started her business on 1st April 2023. So they started business, C started business on 1st April 2023. Her trading results as adjusted for tax purpose for the first 2 years are as follows. So for 23-24 loss of 12,000 and year ended 31st March 2025, 24-25 profit is 5,465. I hope this is clear. Now, students, either we can use the ongoing rules or special option. We will claim the special option because before becoming self-employed, C has been employed as a dressmaker. Her remuneration from this employment, which ceased on 30th September 2021, was for tax year this 21-22, 2021. C has other income of 4,850 per annum. Calculate the taxable income for tax years after claiming special opening year relief, assuming that tax rates and allowance for the tax year 23-24 apply throughout the years. So here, students, we need to apply the special rate relief. And which option we will select, students? We need to claim the special year opening relief. So now, students, tax year of 20, 21, 21, 22, 22, 23, 23, 24, 24, 25. Loss memorandum. Trading loss of 23, 24. Trading loss 23, 24 is, students, the loss is 12,000. Now students, we have three options: carry forward, no, applying the ongoing rules, or claiming the early trade loss relief. So now we need to select the special rule. Now students, now first we'll write trading profits. No trading profit, no trading profit, no trading. Here we had a loss, no. 24, 25, 4,000, 5,465. Then employment income 22, 21, 6,200, 13,490, 22, 23 is 7,300, and from 23, 24 we have started our business. No employment income. Now coming to other income, it is other income mentioned here is 4,850, students. 4,850 for each per annum. 4,850, 4,850, 4,850, 4,850. I hope till here it is clear. Now students, we need to claim the tax relief. As we need to see, we can claim the ongoing relief. Now we need to check whether the early trade loss relief or the special opening year relief will be available. As we are starting our business from 23, 24, and this is within the first 4 tax years, so the early trade loss relief or the opening year loss relief will be available, it will be available. So students, if it is available, this first we will set off against the loss, will be set off against the previous 3 tax years total income, and the restriction also applies against the total income. Same, we have seen the restriction on the total income. So as no trading profit, so no issues. If trading profit, the restriction will not apply, only on the other income. Now students, coming to the total income here. So our total income will be 21,050, 18,340, 12,150. Here it will be 4,850. Here it will be 10,350. Now students, less loss relief. This is opening year loss relief. Now we can set off it against previous 3 tax year, but the maximum restriction applies. But the maximum restriction says, students, higher of 50,000 or 25% of the ATI. As we can see, our total income is less, so the maximum will be 50,000. So maximum we can claim 50,000. So now opening year rules set off total income in 3 tax years before tax year of loss. We can set off on LIFO basis. So this is the tax year of loss. So previous 3 tax year will set off the loss from FIFO basis. This is first in first out. The first one will be this year. The previous 3 tax year are this, and it will start from first in first out. LIFO basis, FIFO basis, sorry, 2021. So we can reduce the whole amount because the maximum is 50,000, students. So here 2021 opening loss relief. So 2021 it is So students, we can set off the whole amount. We can set off the whole amount, but students, our loss is only 12,000. Our loss is only 12,000. I hope this is clear. Our loss is only 12,000. So 12,000 we can reduce it. So our net income will be here 9,050. Here same, was no relief. So loss memorandum students, whole amount, but our loss is lower than this, so we can claim the whole 12,000. I hope this is clear. The opening relief is clear. The opening year loss relief, the extra relief which we get if we incur loss in the first 4 tax year of the trading. That is, if we start a trade and first 4 tax years we incur loss, we have an additional relief of opening year tax relief. And here also students, no partial claim is allowed. Now moving forward to terminal loss relief. Terminal loss relief means when we incur loss when we are in the period in which we close our business. The option available in the closing years of a trade are exactly the same as those available to ongoing business, except that the option to carry forward loss is not available, as there will be no future trading profits once the trade has ceased. The same rules apply, but students, the carry forward will not be available because we are closing our business. Future profits will not be there. An extra option of terminal loss relief is available. In opening year, we have seen if loss is incurred in first 4 tax year of the trade, opening year loss relief is available. But if we have incurred loss when we close our business, we have an additional option of terminal loss relief. So the option was relief against total income, chargeable gain, or terminal loss relief against carry back against trading profit. If a trading loss occurs in closing years, the trader can decide whether to claim relief against total income and then possibly offset against gains, or claim terminal loss relief against trading profit. That is, the loss can be set off against last 3 years against the trading profit. Students, in the opening year it was total income, but in terminal loss relief it is trading profits only. Please do keep in mind, many students will go wrong here only. They will take here also total income. No students, it is only trading profit. It is only trading profit. Now moving to the rules. The relief operates as follows. Terminal loss relief. Option claim, however, will normally be claimed, otherwise the benefit of loss may be lost. The relief is to set the terminal loss against trading profits of the last tax year, if any, and then carry back 3 years on a LIFO basis. So students, first we need to set off against the trading. The relief is to set the trading loss against trading profit of the last tax year, if any, and then carry back 3 tax years on a LIFO basis. The terminal loss is the loss for the last 12 months. See below. For tax year 23-24, the claim must be made by 5th April 2028. But for this, it was 26. For terminal loss, it is the claim must be made 2028. Now students, if let's take an example so that it will be very clear. We have, when we are closing a business, we have 2 options. Relief normal or an additional relief of terminal loss relief. Now students, this loss relief, terminal loss relief, says that if we have a loss in our year of closing the business, then this loss we can either set off against the ongoing rules, or we can select the terminal loss relief, that is set off against the last 3 years trading profit against FIFO basis, against the FIFO basis, against the FIFO basis. I hope this point is clear, students. The terminal loss is the loss of last 12 months of trading. The last 12 months accounting period will be the terminal loss. Note that it is not compulsory to make a chargeable a claim against total income before claiming terminal loss relief. So first we can claim this, and then, so it is not compulsory to make claim against total income before claiming the terminal loss relief. Either you can choose this or either you can choose that. So before claiming the terminal loss relief, it is not compulsory to make claims against the total income. However, where losses included in the above terminal losses calculation have already been relieved under another claim, that is against total income or chargeable gain, the amount of terminal loss must be reduced. If we have already claimed against the total income, then the terminal loss amount will reduce, which needs to be set off. Either we can follow the terminal loss relief or total income. We can start with terminal loss, then move to taxable. Either we can start from taxable income and then move to terminal loss. But here the loss will be set off against the previous 3 tax years trading profit in FIFO basis, not LIFO basis, not FIFO basis. FIFO basis is only for the opening year use, but for terminal loss it is LIFO basis. Please do keep in mind, it will start early as possible, it will start from late, that is previous. Now we will be doing a question so that we have a better understanding. Terminal trading loss relief. There are rules for calculating the amount of loss available for terminal loss relief, but these are not examinable for your exam sitting. Where a question is set on a terminal loss relief, the amount of terminal loss will be provided. So students, we have seen here the terminal loss is the loss for last 12 months period. Before the previous finance act, we had different rules, so we need to calculate the terminal loss. But in your examination, the examiner will directly state the terminal loss amount for the period. Why ceased trading on 31st March 2024? His final period of trade was the year ended 31st March 2000. So the final year was 31st March 2024. So this is tax year of 23-24. And before that, he prepared accounts annually to 31st March. His tax adjusted trading results are as follows. Year, this is a loss 7,200. 22, 23 tax year 100. 23, 21, 22, 20, 21. We need to mention the tax year. So we have given the income. Y had no other source of income. Calculate the terminal loss relief to Y and show how relief will be maintained. How the relief will be obtained. How relief will be obtained, students. Now here, as 31st March 2024, we are ceasing the business. We have two options, terminal loss relief or ongoing, but it is specified calculate the terminal loss relief available to Y. So tax year of 20, 21, 21, 22, 22, 23, 23, 24. And trading profits or income are given as follows. 7,500, 7,100, 0, less relief, as we are setting it off on the trading profit. So students, the terminal trading loss says that the loss can be set off against the previous 3 tax year in LIFO basis, last in first out. So last is 22-23 tax year, then 21-22, then 20-21. But when we followed the opening year loss relief, it was from current first in first out, 20-21, 21-22, 22-23. But when coming to the terminal loss, we need to follow in LIFO way, and it can only be set off against the students trading profits. Please do keep in mind, students, opening year it was total income, and we need to apply the restrictions also. So here it is 7,200. I hope this is only the loss figure. Yeah. So loss, so 23-24, no, we are claiming this. So last year 100, LIFO basis, so 22-23 terminal loss relief 100, then terminal loss relief 21-22, so it will be, students, 7,000, the whole 7,000, because our loss is 7,100, so 7,000, so still remaining is 100, so this year 100, so here the total income will be, students, 7,400, here 0, 0, 0. I hope this is clear. So terminal loss relief 20-21 is 100, because we can't claim 7,500 because the loss remaining is only 100, students. I hope by solving this question you have a good understanding of terminal trading loss. But students, terminal trading loss is an option. It is an additional relief which is provided with the ongoing rule. Both in opening and terminal, both ongoing rules will be applied, but additional relief we need to see which we will claim. And the claim must be made for the terminal loss relief by 2028, but for opening it is 2026. And students, in opening trading loss we were setting against the total income, and the restriction also applies, maximum of 50,000 or 25% of the ATI. But when coming to terminal loss relief, the loss will be set off against only the trading profit, last 3 tax years trading profit. I hope this is clear. Now coming to the choice of loss relief. Utilizing loss relief. So students, we have seen many types of loss relief. Now we need to see what are the factors which will affect the choice of the relief. As we have seen, we have discussed, if we need to claim the relief where we pay higher tax as soon as possible or PA is wasted. Now we will be studying in more detail. Utilizing loss relief. When planning reliefs for trading loss, careful consideration needs to be given to the personal circumstances of the individual. We need to think as a tax advisor. Tax advisor should aim to satisfy the following goals of a taxpayer. Obtain tax relief at the highest marginal rate of tax. If a person, in which year he is paying the highest tax rate, in that year if we are able to claim, it will be better. Then the second factor which affects the relief, the choice relief, is obtaining relief as soon as possible. This can mean that tax from earlier year is repaid, or it may reduce tax payable soon. That is, if we claim the relief as soon as possible, that is previous year, current year loss, if we claim previous year first, we will get tax refund, or the tax payable will be low in the current year. Ensure the taxpayers PA, saving income nil rate band and dividend income nil rate band are not wasted if possible. So in this order we need to select the relief. But till now we have solved many questions, students. In all the question it was specified, but in your examination question you need to follow this relief, this choice of loss relief option. First, you need to obtain the tax relief at highest marginal rate of tax. If an individual is paying in current year highest income tax when compared to previous year, then you need to set off in the current year when compared to the future years. The second option is obtaining relief as soon as possible. If an individual in both the tax year is paying the same relief, then we will select the previous year first. But in previous year, in current year he is paying more tax, then we will set off against the current year first, and then previous year will move forward. If relief needs to be claimed as soon as possible, then we will start with previous year. When we will start with previous year? If the individual in both the current and previous year tax pays the same income tax. That the income tax rate, we need to see the income tax rate, students. Ensure the taxpayer personal allowance, saving income nil rate ban and dividend income nil rate ban are not wasted if possible. If may not be possible to satisfy all of these aims, we can't satisfy all of these three aims in one go, students. In one go, we can't satisfy these three conditions. In order to get a higher rate of relief, the taxpayer may have to waste the PA. Carry forward loss relief may give a higher rate relief, but the cash flow implications of claiming relief now rather than waiting for relief may be more important to the taxpayer. So if we carry forward it, then the cash flow, the time value needs to be considered, but it is more important to claim the relief when we are paying higher tax rate. The specific circumstances faced by the taxpayer will help to determine which of this is most important. So these are the factors which we need to consider. In understanding the position of the taxpayer, it is important to understand the competitive features of the various reliefs. So students, we have already studied the reliefs. Now we are seeing which relief we will select first. Whether we will go with the opening year or ongoing or terminal. When coming to ongoing, whether we will select carry forward or will set off against the total income or carry forward or chargeable gains or carry forward. Total income normally claim. Total income normally claim, possible also chargeable gain relief current year and previous year. Flexibility either neither or both tax years, all or nothing, maximum restriction apply. Maximum restriction will apply. We need to claim the full amount or we can't claim anything. Total income, special opening years, preceding 3 tax years on a FIFO basis, we can use it. Only in the first 4 years of trade, all or nothing can be used with normal claims against total income, maximum restriction will apply. So if opening years rules are applying, then ongoing rules also will be applicable. We need to select future trading profits as soon as possible. As soon as possible in future. Trading loss, terminal loss claim, current and then preceding 3 tax year on LIFO basis. So the timing of the relief will be, students, first in the trading terminal loss, first we need to set off against the current and then preceding 3 tax years on LIFO basis. Only on cessation, all or nothing can be used with normal claims against total income. So students, we have studied the types of reliefs. We have already studied the types of reliefs, and now we are seeing the factors which we need to consider. If an individual is paying higher tax rate in that year, first we need to claim in that year, then as soon as possible, then if any PA or this, and we can't be able to justify all these three under a single head. So we need to think as a tax advisor how much tax or possibly we can save. The more tax we can save, it will be the more benefit to the taxpayer. So the loss relief needs to be claimed in a view of that we save as much as tax possible. This is the simple rule, students. Now we have seen that income relief, total income, normal claim, total income, special year claim, trading profits, terminal loss, opening year rule, terminal loss, future profits, and we have seen the specific rules, and the partial claim is not allowed in any of the option. In any of the option, no partial claim is allowable. No partial claim is allowed, students. I hope this is clear. Now moving forward to partnership losses. The allocation of trading losses. Trading losses are allocated between partners in exactly the same way as trading profit. We have covered in a previous chapter, chapter number 9. Loss relief claims available. Claims available to partner are same as those for the sole trader. A partner joining a partnership may be entitled to claim opening year rules loss relief, where a loss relief has incurred in the first 4 years of the membership of the partnership. This relief would not be available to existing partner. So students, these loss relief available to the partners are same as to that of the sole trader. If a partner is a partner of the partnership for many years, then the ongoing rule will apply. If a new partner joins, then ongoing rules will apply, and a special rule, the opening year rule, will apply. If an individual will leave, a partner leaving the partnership may be entitled to claim for terminal loss relief. Again, this relief would not be available to partners remaining in the partnership. So students, simple, it is same as the case of sole trader. I am a partner in any partnership firm. I am the partner for many years. So ongoing rules will apply. Excuse me. And if the partner is joining new, then the ongoing rule will be applicable, and the opening year loss relief will be also applicable to this partner. Not all the partner. We need to see the conditions of the partner. If the partner is joining this year, then if the loss is incurred in first 4 tax years of the members of the partnership, then this rule will be applicable. If a partner is leaving, then the ongoing rules will be also applicable, plus terminal loss relief will also be available. So these are the 2 reliefs which will be available. I hope this is clear, students. Now we'll be seeing same, no issues, same as the partnership losses. Partnership losses. D, L and J are in the partnership preparing their accounts to 5th April. So they are preparing the accounts to 5th April. This is in line with our tax year, students. It is in line with tax year. During the tax year 23-24, J left the partnership and H joined in his place. So students, J left and H joined. J left and H joined in his place. For the year ended 5th April 2024, the partnership made a tax adjusted trading loss of 40,000. State the loss relief claims that are available to the partners. So now students, we have 4 partners. So D is an ongoing partner. So for D, ongoing relief will be available. Ongoing years relief will be available. L, also ongoing relief will be available. Ongoing year rules or the reliefs will be available. That is carry forward or set off against the total income, current year or previous year, or Further option, after claiming more loss, chargeable gain or carry forward. But students, J has left the partnership. If J is leaving the partnership, ongoing rules and terminal loss relief, that is the closing year rule, will be applied. The closing year rule means the ongoing year rules relief plus the terminal loss relief will be available to J. When compared to H students, H will be entitled to ongoing rules plus opening year loss relief rules. That is, the loss can be claimed for the previous 3 tax year in the LIFO basis, but first we need to set off against the current year trading income. Then we can carry forward it to the carry back to the previous 3 years in the LIFO basis. But when coming to the opening years, it can be set off against the total income. For terminal, it was trading profits. Here opening, it is total income, and in FIFO basis, first in first out. Opening year rules apply when if an individual incurs loss in first 4 years of first 4 years of the starting of his business. First 4 tax years of starting his business, the opening year loss rule will apply. I hope students, by solving this question, we are good to go with the partnership loss also. The same types of relief will be available, but if we are starting a new trade, the opening year loss relief will be available. If a partner is leaving, terminal loss will be available to that partner only, not for other partners. If a partner joining, opening year relief to that partner and ongoing. If a partner leaving, ongoing plus terminal loss relief to that partner. I hope students, by solving this question, we were good to go with the partnership, and by completing this topic, we have completed this chapter. I hope today's session was very interesting, and if you have any doubts, please do message in the WhatsApp group so that your queries get solved. Once again, students, thank you to all of you. I hope you have a good day. Thank you.